The housing market is holding itself together because people are not selling because they don't want to get rid of their 3-4% 30-year fixed rates. But what is happening is that there are no buyers out there because they all got outpriced, right? Believe it or not, housing median home price in the U.S. is $400,000 now. And in order to sustain a mortgage on that, even if you put 20% down, is completely unaffordable. And I talked about the affordability index last week, and I'm continuing with that subject this week. The new median price is at $400,000, and median new mortgage payment now requires 41.4% of the median U.S. household income. Well, first of all, when that happens, there is something called LTV, loan to value, right? When I had a mortgage company, we always looked at LTV, right? So that means you may have to, and the rule of thumb is LTV should not be more than 30%, okay? But then if you're requiring 41, almost 42% of your household income just to pay mortgage, another rule of thumb is that, you should be right around 25 to 30% of your household income should go into your mortgage payment, as opposed to 41, 50, 60% sometimes, right? Well, when that happens, our affordability index gets worse and worse and worse. So to put this in perspective, even at the peak of 2008 financial crisis, this metric topped at 39.3%. So what does that mean? People's household incomes have not risen or kept pace with inflation that we're facing, right? Who's making, 5% more every single year? I don't think that has happened to paychecks. So, but home prices have gone up tremendously. Median home prices hitting 400,000, right? And the fact that interest rates have gone up from 0 to 5%. Mortgages, our 30-year mortgages went from 3.5% to 7% now. So completely unaffordable picture that I'm looking at. But now, due to the household incomes not keeping pace with anything in this country, to be honest with you, now you're supposed to spend close to 42% of your household income just to pay your mortgage. And when I say household income, it could be one earner or two earner. But imagine if you're a two earner and you're paying 42% of your household income to just service your debt, which is the mortgage. And if you get a 30-year mortgage, we know the first 20 years you're basically paying interest. Very little is being reduced from your equity. I mean, very little is being reduced from the mortgage amount in principle, right? So what is happening here? If you're going to buy a house today, number one, is super unaffordable. And then what's going to happen is that the banks are going to require now for you to put more money as a down payment, right? So if you're getting into a median house at 400,000, if it was 20%, now that when they look at your LTV, they may say, no, you got to put out 25%, right? Not because housing prices are going to crash, but then they look at LTVs, they look at many different things when they put a mortgage out, and the affordability index is completely upside down. And this also says that people have to now stretch to use more of their income just to have a roof over their head. And that's not looking good to me anyway. On a post-tax basis, new home buyers are spending over half of their annual income on mortgage payments. I mean, if you're in that situation, if you're a two-income household and you're spending over half of your income on mortgage, okay, if one of you loses a job or something happens, health scare, whatever it is, you're going to lose that house. So, buying a house at the moment may not be the best thing. It's unaffordable to start with, but then even if you do stretch yourself out just to get a roof, to be a first-time homeowner, or upgrade or downgrade your house, be really, really careful with that. Make sure that you're not spending 50% of your income on your mortgage, because as we know, the other expenses don't stop. Bills keep showing up. Even renting a home now costs over 30% of the median household income in the US, which is crazy to me, right? Before, people used to buy homes because renting, it was much better than renting. At least you just own a home and then you're creating equity for yourself over long periods of time. Now, rents have gone up so much, right? And this is all fueling inflation, okay? Rents have gone up so much that So if you're a single person looking for a single and 30% of your income is going to rent, I mean, it's a pretty shitty situation, to be honest with you. Last time housing affordability was this bad, interest rates were nearly 20%. Yeah, I remember that. That was in 1978, 79, when Federal Reserve Chairman Paul Walker was around, and we let the inflation genie out of the bottle. He had to raise the rates to 20%. No joke. So, people don't have a way of looking back in history. I mean, you need to, in order to understand history, you have to look back and then put a bigger picture with a bigger magnifying glass once in a while. Simply having a place to live is becoming a luxury. I agree with that sentence completely. So, yeah, I mean, if you're out there starting life as a couple, college graduate, both decent jobs, be careful. Do not stretch yourself out. Don't put 42, 43, 50% of your income post-tax basis just to pay your mortgage month after month after month.